I don't know about you, but for me, this week went so slow. Maybe it was because last week was a shortened week. I don't know. Whatever it was just so slow. All right, well, let's speed it up. Let's take a look. I'm going to start out today with just a little quiz. I know you hate quizzes, but stay with me. Earlier this week, Guggenheim Securities, which is an investment banking firm, decided to buy out Milstein and Company. You probably haven't heard of Milstein and Company, and you may not have heard of Guggenheim Securities. So you might not be able to answer the question. So here, let me give you a hint. In looking at this chart here, since 2009, the amount of debt accumulated by global non-financial junk-rated companies has soared by 58%, representing about 3.7 trillion in outstanding debt, the highest ever, with 40% or about 2 trillion rated at B1 or lower. And B1 or lower, that's not good credit. So putting this into context, since 2009, U.S. corporate debt has increased by 49%, hitting a record total of about 8.8 trillion. And much of that debt is used to fund stock repurchases. And as a percentage of the gross domestic product, or GDP, corporate debt is at a level which on each prior occasion, as you can see by this chart, resulted in a financial crisis. And we're back up there again. So here's the answer. The so-called coming debt deluge, which Guggenheim believes is going to be coming, they bought out or are going to buy out Milstein's restructuring advisory firm. Why? Guggenheim believes that when the next recession hits, traditional banking revenue streams will collapse, leaving restructuring advisory businesses as the only winners. Think about that. Let's go to the charts. Starting out here with the 20-year monthly chart on the Spiders SPY, and the close was just shy of 280 at 279.59. And as you can see here, we had the peak at this point about there, and we've made our way down, and we're now making our way up. Let's go see the MACD. We can see here in the MACD, they're finally getting this reflection. The fast line is reflecting off of the slow line, and we should be making some sort of dish like that. Moving here into the MAC histogram as well, you can see just a little bit of a dish there with a slightly higher measure in this last month here, just above the zero line into the relative strength. You can definitely see the bounce and then the move up there, as well as in the stochastic. And volume looks fine, but then you see the same thing in the Williams. So we are having that reflection that I've been anticipating for some time, and perhaps maybe that's why I'm a bit impatient. Why this was such a slow week for me, I'm impatient. But let's move on to the weekly chart. 2-year weekly chart on the spiders, and as we can see here, this level where we're at right now, I think we've just gone above the previous level here, and we're approaching this previous high there. We'll probably move into next week and breach that level here. That's my expectation. We'll take a closer look at that once we get to the daily. But looking here at the MACD, it looks like we have this reflection, and now we're going to start perhaps accelerating off of that slow line, heading on up. Moving here into the MAC histogram, you can see the same thing, the reflection, and then the bounce off there. And the same thing sort of shows up here in the RSI and the stochastics. We're getting toward the overbought territory. At least the fast line has moved into the overbought territory. I think we still have some more movement, higher move in the stochastic. So I think We'll just watch that, but we just moved into that overbought territory. No real concern at this point in time, and the volume looks fine with a slightly higher green week into the Williams. Williams did have that bounce and back up into this overbought territory, but again, that's okay. We can stay in the overbought territory for extended periods of time, as you've seen here back in these occasions. So moving on back up here, it looks like we've got some more upward movement to go, but let's take a closer look on the daily chart. And this is the 6-month daily chart on the spiders, and I've drawn these lines here. This is the current channel, the bottom of the current channel running through this way, and then the top of the current channel running this way. We hit this resistance line on this horizontal going all the way back to this previous high here. We were reluctant to move above that resistance line back here. We're still bumping up against it now, but I think into next week we'll probably breach that and then head up to this the top portion of the channel someplace around here, and I think we'll hesitate as well in going further at that point, because then the next stopping point would be the previous high at about there. So I think those are just natural hesitation points because of the traditional sort of technical analysis a lot of people watch. So those lines, those levels will be hesitations in the market. So we'll have to wait into next week to see what happens, but I do expect we'll move above this 280 and head toward the top of that channel. And I say that in part because the MACD, you can see that the fast line is starting to accelerate here and open up a, say, varied differential between the slow line down here, heading on up. And you can see that as well in the histogram, continuing to move on up. And here into the RSI, we have bumped up there as we kind of did back in these two previous times, but I'm expecting a continuation of the RSI further up here into that overbought territory. And that can be seen here is that the stochastics, we're not quite at the top here yet as we were back here in this time frame or in this time frame. Still have a separation between the fast line and the slow line. Both are still moving on up. So I expect the market to continue. The volume, at least today, was a little lower, but it's still it's moderate. It's not great. It's not real strong, but I think it's going to be strong enough to continue into next week and hopefully breach that 280 level. And moving here into the Williams shows me that we're in the overbought territory. But again, I think we're going to stay up here for a little while as the price moves on up above that 280 level. Back up here to the price chart to show you once again. We'll breach that into next week, and then from that point in time we'll start reaching up again to the upper portion of this trend line. So I think we have a positive week. At least that's the probability coming into next week. So for today, that's ChewDog Charts. Thank you.